Hi, everyone. Let's see. We're going to just give everybody a few minutes to get logged on and get connected. So just kind of hang tight for about another 5 minutes, okay?
I'm Paul Reynolds, one of the co-founders at the Blue Bunny. Constant contact is an essential tool for us. It's not a nice to have, it's actually a must have. I'm Paul Reynolds, one of the co-founders at the Blue Bunny. Constant contact is an essential tool for us. It's not a nice to have, it's actually a must have. I'm Paul Reynolds, one of the co-founders at the Blue Bunny. Constant contact is an essential tool for us. It's not a nice to have, it's actually a must have.
For those of you that are logged in already, I was telling some of the others, we're just going to wait a few more minutes just to let some of the people behind to log on and take a look at everything.
For those of you that are logged in already,
I was telling some of the others, we're just going to wait a few more minutes just to let some of the people behind to log on and take a look at everything.
For those of you that are logged in already,
just a reminder, if you have any questions, you can certainly post the questions in the Facebook group or on the Facebook page. Right now we're logged into Twitter, so RDU Homes for Rent is the Twitter account. If you have any questions during the event, just direct your tweet towards us, and we'll reply. Hopefully we'll be able to answer your questions. After this event, we will be logged on to Facebook and try to kind of be available to answer some questions after that. Okay, so anyway, let's go ahead and get started. Let's see here. All right, so a little bit about me. I'm a licensed real estate broker. I've been in the business since 2007. I'm the broker in charge of our firm. Here on the screen, you see my license, my firm license. We're incorporated in the state of North Carolina, and we're registered in Wake County. A+ rating with the Better Business Bureau. You've got our office number right there as well. Okay. All right. Another thing is you need to be aware of just the general rules of working with a real estate agent. It's the law for me to disclose this to you from the very beginning. So if you will, just jot down this link, go online. You can just download this and read through it. One of the important things is in a circumstance, like this, we will be dealing in dual agency. Meaning that depending on the situation, I may be representing you and both another party in the purchase of the house. Okay. So the traditional lease purchase option is you go and you're searching for an owner that's willing to lease with a purchase option, which is kind of hard these days. You're going to pay a down payment before you even move in. Let's say that the house is $100,000. That owner is probably going to be looking for at about a $10,000 down payment from you at the minimum, with some sort of definitive date for you to actually buy the home from him. And if you don't meet that limit, then you could lose the house and lose your down payment and everything. The way that this program is first of all, you're going to get approved for a monthly rental rate. Then you're going to choose a home from the available listings. The home is going to be secured for you. So it won't actually be in your name. It's going to be secured in a third party. And then basically from that point, you're just going to pay your first month's rent and a security deposit. You'll move in, and then you actually have up to 5 years to exercise your right to purchase. So there's no risk involved as far as, what happens if I don't execute my right to purchase within a year. What if I'm still not ready? Well, that's okay. You still have a little bit more time to kind of make that happen. Okay. All right. So what are the requirements? What is, investigated for you to get approved for this? Your credit score is a factor, your financial history, such as like bankruptcies and things like that, your income, rental history, and criminal history is also a factor. Okay. So the important thing about the credit score is that obviously you've seen it's a minimum score of 525. That's like phenomenal. You just don't see that anywhere, and it's a weighted average. And so what that basically means is, let's say you have two adults in the household who are going to buy the house. Well, what happens is, let's say one person has 500 score, one person has a 700 score. Well, you're gonna average that out to be 600, but it's based on income. So if one person has a higher income than the other, then their credit score holds more value. It has a heavier weight on that average. Okay. Transunion is the credit bureau which is used to calculate your credit score. So whatever information is on your TransUnion credit report, that's what's going into the score. Okay, and they use the scoring model, the FICO scoring model 5. If you have questions about the FICO score, how FICO scores are calculated, or what the different types of scores are, you can actually go to myfico.com. There's a lot of information there. Also, if you want to just touch base with me afterwards, you know, I'm more than happy to answer your questions on that. I know it's easy to get lost with all the different scoring models that are out there. But for the sake of renting a home and buying a home, usually is the scoring model 5, the FICO scoring model 5, which is used for things like that. Anyway, so anyway, going back, so your standard FICO score that you normally would see, like if you just went and got your credit score from myfico.com, just the standard score, that's most likely not going to be the model 5. That's most likely going to be either a model 8 or a model 9. And it's also going to be relative to the industry. Is it an automobile, a mortgage, or credit cards? Okay. So here's how the weighted average works. And by the way, all this is going to be available afterwards. I'm going to make it available to you so you can go back and look at it. But let's say, for example, you have 2 incomes. One person earns $45,000 a year. The other person earns $25,000 a year. And so you've got the person that owns $45,000 a year has 64% of the income, and their credit score is 590, for example. Okay. Well, that 590 counts for 64% of the weight. All right. So you're going to take 64% of 590, and then you'll only take 36% of the 520. Then you'll add those together, and that's what's going to be your score for the weighted average. Okay. So as you can see, you know, if one person, you know, has it just depends on how things fall in the terms of the income and the weight, but you have some little bit of wiggle room there. As far as bankruptcies, so you cannot have any open bankruptcies. What that means is if you filed bankruptcy recently and it's still open, you're still working on it, nothing's closed yet, nothing's final, you won't be approved. You have to wait until that's done. Following that, you would have to wait 3 years after it's closed. Okay, so you cannot have a bankruptcy within the last 3 years. All right. You have to have a total household income minimum of $50,000. So what does that mean? That means like if you have 2 people in the household that earn $25,000 a year, then you meet the goal. Okay. It could be self-employment income. It could be you know, an income from a job. It could be disability. It could be retirement. It could be a number of things. You know, there's a lot that can go into income. Okay, so if you think you can't meet this mark, think again, because you probably can and you just don't even realize it. All right. You cannot have any evictions in the last 5 years. If you have you know, if you've been late on payments, that's not necessarily an eviction. If an eviction proceeding was filed, but you weren't convicted of it, or you know, it was dismissed, that doesn't count as an eviction. Okay, it's only if you physically were evicted from the property and were removed from the property. All right. I know that, you know, some people go through hard times. It's not always you know, the person's fault who went through it. You know, but circumstance is that if you did physically have to get removed, then that needs to have expired 5 years ago. Okay. All right. So there's no felonies or certain misdemeanors within the last 7 to 10 years. So this all kind of depends on what the offense was and what the you know, how serious it was it a felony or was it a misdemeanor, that sort of thing. So I know this is a little gray. This will have to, you know, if this is going to be an issue for you, we'll have to kind of look at this on a case-by-case basis and see where we're at with it, because it's not necessarily concrete. So that's one thing we'll just have to look at. And so don't get discouraged if you've got a misdemeanor, you know, for something silly that you did, you know, it's in your past. So don't worry about that. You know, we'll cross that bridge when we get there. So one of the big factors is your debt-to-income ratio. Okay, this is going to determine how much rent that you're approved for. Okay, so your debt-to-income ratio means, you know, whatever you're paying every month versus what your income is. Now, that doesn't mean your cell phone bill and things like that. It only means something that you're in a committed contract, which is reporting to your credit bureau. All right. So let's say, for example, you've got you know, a car loan. Definitely, you're going to have to pay that off. You're paying that every month. But your car insurance, no, that doesn't count towards your debt. Okay, you can cancel your car insurance anytime. All right. So it's only the hard trade lines. An example of well, first of all, let me step back. You get a 45% debt to income ratio. That's the highest I've ever seen. Typically, it's around between 28% and 36%. That's generally the industry standard. So 45% is really high. Let's say you have a $4,000 a month income. Well, you have a car payment and some credit cards, and that all totals $550. Well, you would still be able to afford $1,250 a month for rent. Okay. Now, if you don't execute your lease, your purchase right at the end of the year, then you're going to look at a small increase in your rental rate of about 50 to 100, which is, you know, worlds apart from the traditional apartments that are out there, where you could be paying anywhere from, you know, $100 to, you know, $500 extra every month, depending on where you live. All right. So here's the thing with the purchase price. All right. So right away, there's a built-in 5% increase. Okay. So the finance company that comes in and buys the house and secures it for you, they hold it for you. You'll actually be renting the house from them. And at the end of the year, you will actually pay 5% more than what they paid for it. Okay. This is good in a sense, because with the way that home prices are right now and the way that they're, you know, appreciating, you're kind of protected from hyperinflation. So, you know, if the house is $100,000 and at the end of the year, you're ready to buy, you're going to pay $105,000, for example. Okay. There's a chance that the market value is $120,000, and that's phenomenal for you, because that means you're basically putting, you know, 15 grand in your pocket right off the bat, or 10 grand rather, if you're going to pay it for 105,000. All right. So, another thing is, $2,500 worth of maintenance. So keep this in mind when you're living in the house for the first year. Okay. When you need maintenance to be done and things like that, it may be better for you to just do it yourself, because you're going to be billed back for that maintenance at the end of, you know, when it's time to buy the house. They'll just build that into the price of the loan. It's not like you have to take it out of your pocket when you're ready to buy. All right. So, so just keep that in mind. I know there's a cap. So, you know, if there's $5,000 worth of maintenance, you're still only going to get charged $2,500. But, you know, you don't want to try to game the system, of course. You know, in the end, that's just not going to pay off anyway. There are some make-ready expenses. Let's say you go in and, you know, the carpet needs to be replaced, for example, for whatever reason. Maybe it's ripped or stained extensively. You know, they'll take care of that for you, but it'll be added into the purchase price at the end as well. Okay. There is a pre-qualification. So you'll do a pre-qualification questionnaire. Okay. You'll answer these questions, and that'll determine if you are eligible or not before you spend any money. Okay. So if you do this questionnaire and it says yes, you know, you're ready to move forward, go ahead and pay the application fee. then yes, go ahead and do it. Now, here's what I recommend in a situation like this. All right. Determining if you're eligible or not before you spend any money is completely up to you, and it's how honest you're going to be. All right. So the first thing would be to get your free credit report. You know, you can get a free TransUnion credit report from Credit Karma. Okay. Doesn't cost you anything. Just go on there, look at, and your TransUnion credit score is right there as well. That's free from Credit Karma. So I don't know why you wouldn't do that right off the bat. I would look at that as the very first thing, and then answer the questionnaire truthfully based on what's on that credit report. And it's either going to say yes, you know, we recommend you apply, or no, we don't recommend you apply. And then so you're kind of stacking the deck, and you're putting yourself in a position where yes, I'm ready to move forward with this right now. Or you can say I've got some things to work on. They've got some questions about how to get where I need to be. So I'm going to call Jonathan, or I'm going to shoot him an email and see if I can get some advice. Guys, if I can't answer your question, I'm not going to lead you down the wrong path. I may refer you over to somebody who's better equipped to answer a question for you. It may be that it turns out you don't even need a program like this. It may turn out that you're actually ready to go right now. And in some cases, you can buy a house, no money down or anything right off the bat without having to do a rent-to-own program. If that's the case, I would probably recommend you take that direction right from the onset rather than doing this, unless for some reason you're not sure if maybe your job is going to move you, or you're thinking about moving to another state or something like that. So anyway, after you do the application, you'll just upload whatever documents they're requesting, and then you'll get an approval or a decline. I do recommend that you talk to me before you actually apply. Go ahead and do the pre-qualification questionnaire, but before you actually apply, I would recommend shoot me an email. Let's just make sure everything, you've got all your ducks in a row before you move forward. Okay. All right. Once you're approved, you'll actually be able to, you can actually browse the homes right now, and I'm going to show you how to do that right after we get off of this this event, the workshop. So let's see. So I've got a message from the King's daughter. I guess the screen is a little bit blurry, and I apologize if I'm going too fast. Don't worry, all this is going to be available to you right afterwards as well. If you had a discharge bankruptcy, that does not disqualify you. Thanks, Leslie, for asking that question. Let's see. Is the screen still blurry for you guys? If somebody can just let me know on Twitter, that would help out a lot. Let's see it. All right. If I get a message from you guys, I'll move on. I mean, I'll try to adjust. It may be blurry just on your end. Depends on what kind of Wi-Fi you're connected to. Okay. Anyway, just stay tuned, and then afterwards you'll have access to all this anyway. Okay. So anyway, so the minimum rental rate is $12.50 per month. Okay. Essentially, you can rent any house that's listed for sale in the Triangle on the MLS. Okay. Right now, that's almost 9,000 homes. Okay. So essentially, what you would do before you move forward, yes, you can get approved for the rent to own and everything, but you still want to just verify that you're going to be prepared to purchase it at the end of the year, and we'll talk more about that after you go through your approval process. After this event, check your email. If you have registered, you're going to get a PDF checklist of everything that you need to qualify. Oh, Okay, everybody's saying that it's kind of blurry. The student loans should not affect you. Medical bills should not affect you. Um, I'm sorry that's blurry for some of you guys. Um, let's see, Vernique and Latoya, Courtney, Miss Go Getter, I like that username. Okay, so I got some messages from people that it's not blurry for them. Okay, so and I'll tell you what. Right after this, we'll jump on Facebook, and whatever questions that you have there, we can just run through them, and I'll see if I can actually upload the PDF onto the Facebook group as well. Some more people saying that the screen is clear. Thanks, JDM. All right, so I think the next part is a little video to watch. I'm hoping that this is going to work for you guys. If not, then that's okay, because I can give you a link to watch it afterwards. And hopefully you have your sound on. Okay. All right. So what I'm going to do now, let's see. I think let's just jump on Facebook, and I'm going to see if I can actually upload this PowerPoint presentation to Facebook so that you guys can download it. And then also I'm going to upload the PDF checklist for what you'll need. And let's see if I can get some answers for your questions and things like that. Okay? All right, so that's it for this. I will see you on Facebook. All right.